I'm Tim Bradner. Welcome to Capital Views. We're here today with Angela Rodell, the Chief Executive Officer of the Alaska Permanent Fund Corporation. Angela, a lot of interest in the permanent fund these days. Maybe you could kind of walk us through what it is, how much it is, how it's invested.
Sure, I'd be happy to do that, Tim. The corporation was created in the early 1980s to manage the fund. The fund was created by constitutional amendment in 1977. So we're coming up on 40 years of the fund's existence. Over those years, it's been invested in many different types of asset classes. Early on, it was strictly a bond, fixed income type of investment. That was considered the most prudent thing. Legislators had in statute a list of allowable investments over the years, and they would amend that list periodically and expand it as investment opportunities arose, and they thought it was prudent for the fund to get into those investment classes. About 10 years ago, they removed the list altogether and just put a prudent investor rule that the Board of Trustees could set the asset allocation and invest in what they deemed most appropriate for the fund. And so since that time, the trustees have been responsible for setting the asset allocation for the fund. At the end of the fiscal year 2015, so we're talking on July 1st of 2015, which feels ages ago at this point, the fund was valued at approximately $53 billion. And a good portion of that, approximately $7.5 billion, give or take, was in the earnings reserve account, and the balance was in what we call the principal account. So we have this principal account. The statutes created an earnings reserve account to be invested alongside the fund as if it were part of the fund. But that is the money that under the Constitution is available for appropriation by the legislature. And they have appropriated that money over the years into what is known as the dividend. So we send a check over to the State Department of Revenue, and they administer the dividend.
Well, late in the year, that makes a lot of Alaskans happy.
It does make a lot of Alaskans
just before
happy.
Christmas.
Yes, exactly.
Angela, going back to the beginning, at the first it was a bond fund, so all of the money was invested in bonds, and these are things with fixed interest rates, so it's very dependable income.
Yes.
Do you know why it was a bond fund? And then why did we begin the move toward gradual equities and stocks and things like that?
I think originally it was the size of the fund was small. Bond returns were much better than they are today. They were in excess. You could have a bond fund that was achieving 7.5%, 8% returns easily. It was very straightforward, and there was a safety aspect to it, I think, that made legislators and the administration very comfortable as an initial investment. As they grew more and more comfortable with investment strategies and saw opportunities to put their toe in the water with stocks, with real estate, they made moves into that direction. I think it was around in the mid-90s that they expanded beyond the borders of the United States and actually started seeing investments in some global stocks and some global bonds, and the opportunities that there were. As we see interest rates move and the need to maintain and achieve a 5% real return, which is the target real return set by the Board of Trustees, we've had to take other avenues and take on a little more risk because we're just not seeing the returns in some of the safest, whether it's cash or bonds, in those safest havens. We're only going to get 1 or 2%.
Yeah. What would an example be of a more aggressive investment aimed at a higher return?
Well, there's two different ways that you could look at it. On the one hand, we do have approximately, I want to say it's about $19 billion in our public equity or stock portfolio. But that's about 36% of the overall asset allocation is in that public equity. And as we've seen recently, that market can get very volatile at times. We had a recent correction here at the end of December. I think the fact that a smaller portion of the portfolio is invested in equities has been to the fund's benefit, because we probably haven't lost to the degree that a traditional like 60-40 asset allocation would have lost. So if we had 60% in equities, that would have resulted in much bigger losses to the fund, but we had 36%. So I think another strategy, though, too, is the time horizon in which we have to invest, because some of our best returning assets are in the private equity space. And those private equity investments are fairly illiquid. We don't necessarily get returns for 7, 8, even 10 years. And I think the reason the fund has been able to be so successful in that space is we don't manage to any set liability, and we have an infinite time horizon. We are to invest to the benefit of all Alaskans, especially future generations of Alaskans. And so we can take the time, but there's a risk to having that money locked up associated with that. So there's two different ways of looking at risk from our standpoint.
And just a quick question here toward the end, Angela. Do we still manage the bond portfolio from Juneau?
Yes, we do. In fact, we've brought in-house investments. Real estate is managed in-house, a portion of our real estate portfolio, the fixed income portfolio. We also do some direct investing with our private equity and our special opportunity space, and that is managed here in Juneau. So we've taken on more and more responsibilities in-house over the years. It's a strategy that the Board of Trustees is very supportive of and continues to want to pursue. We think it makes us more nimble and able to better react. It gives us greater control over the portfolio. And probably the best reason is that it generates considerably better returns and doesn't cost nearly the fees that having contracting and having that external management.
Yeah. Well, thank you very much, Angela. This is interesting. Thank you for joining us.
Thank you.
This is Tim Bradner. Thank you for joining us, Capitol Views.